Go gold is the theme, and that 10% golden rule. It seems to be playing out so well and prudent to have 10% of your portfolio in gold, and what a spectacular first 6 months. And then we tack on the month of July, and here we are in August, and its spectacular run has now surpassed the S&P 500 year to date. What's interesting for me is that when we look at data and we talk about standard deviation moves, in fact, over a 12-month rate of return, gold is not overbought. It would have to be plus 20% over 12 months to signal one standard deviation or one sigma, and we're not there yet. However, the gold stocks are up close to 50%, and so that is signaling something else that's going on. And I think the volatility of gold stocks is going back to the 3-to-1 ratio. So that would mean that one standard deviation is going to be pushing more like 50%, so we're pushing up against that. So any pullback in gold is a buy, and the gold stocks are just going to have greater volatility, and they're going to also be a buy. And that's what we look at. We've always advocated this sort of a 10% theme. We think it's just prudent and diversified portfolio. And why? Well, negative real interest rates. Negative. What do you mean by negative? Well, what this government is trying to seduce you, induce you, come buy my 10-year government bond. And in Germany, they will basically penalize you for buying it. And they're printing money, buying their own bonds, creating funny money paper. And what's really shocking to me is it's pushing $15 trillion of global debt by governments are offering negative real interest rates. That is, buy my bond, and after inflation, you're losing money. Over 1, 3, 5, 10-year periods. So anytime this has happened, gold starts to rally in that country's currency. So stay tuned, make sure you maintain that position, and if you've not got the 10%, take a look to buy on a pullback.